Well, howdy, folks. Let's talk about natural gas. What an interesting weekend. We've got this environmental ministers thingy going on at SAPPORO in Japan, and there's a lot of hoo-ha about this meeting. And you've also got me in the corner of the screen. I'm sorry about this, but I am using a new MacBook M2, so I'm trying it out, and I want to see how the rendering works and everything. I'm not much of a YouTuber, so I don't need a fancy Pro MacBook or 15-inch or bigger, but I do need it to do the job, so I'm just trying it out in this video. So forgive my face, I know it's annoying, but you're just going to have to put up with it for today. All right, so let's see what's going on, what happened in this meeting. I'm not going to spend a lot of time on this, so I'm going to look at the charts, but I've put a little funny video up, which I'm going to link at the end of this video. You can go and have a look at that to see kind of what I think overall idea behind all of this is. So basically the G7 environment ministers met in Japan and talked about cutting back on fossil fuels and the use of coal, natural gas, oil, etc. by 2030 or 2045. There wasn't a lot of agreement on the dates and the progress on it. You can read all about it. You can watch various videos on YouTube. You can find out more about it there. So I'm not going to go into a lot of details, but first of all, the idea is to cut back, first of all, on the usage or the consumption of natural gas and oil and coal, and to try and replace that with sustainable, environmentally green energy forms like maybe hydroelectric or solar or wind, etc. Now we know that it's actually not possible to replace fossil fuels entirely, or even perhaps significantly at this stage, with those other forms of energy, and more of a combined approach is needed towards energy supply. So we're not going to reduce our dependence on fossil fuels anytime in the near future. And not only do they want to cut down on the usage or the consumption of fossil fuels, but they also want to cut down on the production and the processing and the transport of fossil fuels, including natural gas, in order to curb supply and to reduce investment, which they hope, I think in a funny sort of way, will reduce demand. This all reminds me a little bit of something that happened in the past in the prohibition in the United States. And I had to go and sort of look up these dates. And on the 16th of January 1919, the 18th Amendment of the US Constitution prohibited the production, transportation, and sale of alcoholic beverages in the United States. And I suppose the same restrictions being envisaged on fossil fuels are a little bit like that. We've got a demand which can't be satisfied in any other viable manner, and yet the call is to cut down on production and manufacture, transport, all of that sort of thing. Very much like the prohibition in 1919, and we know how that turned out. So the big question is, how has this meeting that took place in Japan over the weekend affected the potential price of natural gas going forward? And after all, that's what we're trading, and that's what we're interested in. So once again, I'd refer you to my funny little video, which I'll link towards the end of this one, and you can see my thoughts on it. I think overall, if I had to take a guess, if you take away the incentive to and the supply and production of a commodity which cannot be replaced viably with anything else right now and is definitely in demand, and demand will probably be increasing in the future, it might very well be bullish for the price of natural gas. However, I don't know. I don't think anyone knows, and we're talking kind of a longer term picture here, so anything can happen tomorrow or the next day or next month or even next year. We really don't know. A lot of it will depend on immediate factors, including supply and demand, geopolitics, weather, etc., as usual. But overall, I don't think that's a very bearish outcome for that meeting. Having said all of that, let's have a look at the charts. Now, Friday was a very interesting day, and I put a little video up here, and I also put a tweet up on Twitter. If you haven't joined my Twitter feed, go and subscribe to that now. The handle is ArcisFX. Let's have a look at the daily chart, and we'll go progressively downwards into the shorter term time frame to see what happened on Friday. We had a spike low beneath that support and a bullish engulfing candle to close the day. However, we're still below the 20-period moving average, and we're still below all of these supports above us. There's an awful long way to go before we get up to $3, $40, $50, $60, or $75, which is our ultimate target for natural gas. So a good start. I must continue to emphasize, despite the way it might affect those holding long positions, that I'm hoping for a dip down to $1.80 or $1.50 in order to get a bigger position on a long natural gas trade, aiming for a break up through these resistance levels and up into that 75 level. I keep on saying 340, 50, 60, or 75. I'm just going to say 350 from now on, but you'll know that I mean anything in that range where that pink block is above us and the 100-day moving average is coming down. So that's what I think. I think it's a good start. I think this meeting may well have been bullish. I don't know. It could be completely the opposite. I really don't know. And actually, as I said, I'd prefer it if the price dropped a wee bit more into that $1.80 or $1.50 level. But it might not do that. We might just rally up from here. So we have this bullish engulfing candle on the day chart. We're still in the middle of the range, below the 20-period moving average, below the top of the range, and nothing to get immediately excited about at all. It could be that we gap down on the opening in just a couple of hours time from now. Just looking at my charts, I think it's about 3 hours from when I've made this video. It could be that we gap down immediately at the open, down below support, down below $2, and head down towards 180 or 150. Or it could be that we gap up, or maybe we don't gap at all. I don't know. I really don't mind if it goes either way. I'm already invested in a long position. I'd like to add more if the price dips a little bit. Let's look at the 4-hour chart, and we see something pretty similar. Just gives us a little bit more detail, but we see the same picture that we see on the day chart here on the 4-hour chart. We dip down below that support, and I think that dip down below support is pretty interesting because it might have stopped a few long positions out. It might have encouraged a few traders to go short. It would have definitely triggered some algorithms and robot traders to either exit longs or go short. And so it would have cleared out quite a large number of positions on that spike down, and it didn't take long for it to rapidly bounce back up again and form a bullish engulfing candle on the 4-hour chart. But again, just moving up into the center of this range, and we've got these 3 moving averages above us, the 20, the 50, and the 100 simple moving average. And we've moved right back into them, and look how closely grouped they are together. So that's going to form quite a significant barrier. It might be that that's the perfect spot for a gap up, sort of leapfrogging those moving averages and moving higher up towards that resistance. Or it might be the perfect place for the market to gap down and just leave them behind, way above where the market goes. Going across to this 1-hour chart, you can actually see how dramatic this move down through the support was. A sudden, strong move down and a close well beneath the level of just about $2. And that hourly candle actually closed really bearishly, really strongly. It only took 2 hours for us to move back above the $2 level, back into the yellow block, which is our trading zone at the moment. And then another couple of hours later, after a small hesitation, we rallied right back up into these moving averages. It's also interesting to see on the 1-hour chart that the 100 and the 200 period moving averages are also right in the center of this range, where we saw the 20, the 50, and the 100 period moving averages on the 4-hour chart and the 20 period moving average on the day chart. So we've got moving averages galore on all of these time frames right where the price is now. So even though it's in the middle of the range, it's a really crucial area. But let's not get too involved in the minutiae of what's going on. Let's have a look back at the day chart. And when you're trading natural gas, it's a really good idea to just go back to the day chart time and time again. Unless you're a day trader or a scalper, this is the best way to trade natural gas if you're more of a swing trader or a longer term trader. If you are an intraday trader, you better be pretty nimble and pretty quick with your trigger finger to get in and out of trades, because it's really volatile. It can move several percent in just a couple of seconds. So on the day chart, the picture remains unchanged. We'll only know what's going to happen when the market opens in a few hours' time and what the effect of that meeting was. And all this talk about cutting back in supply is going to be bullish for the market overall. And remember, these markets are governed by sentiment, not only politics and supply and demand and money change, but sentiment and thoughts and ideas, human emotions play a large role in all markets, but I think particularly in commodity markets. And the idea that we might be getting a cutback in natural gas supplies could well be bullish for the market. Once again, I'm not predicting this. I'm not saying this is the case at all. It could be interpreted completely differently by the crowd. I don't know. I'm just one single person. Looking at the day chart, we've got to get above this 20-period moving average, above this range top. Don't chase this trade right now. Don't fall prey to the fear of missing out, FOMO. If you want to get long on natural gas and it doesn't come back to $2, 180 or 150, wait for a break and a close and a hold above these increasingly higher resistance zones and trade the pullback and successful hold above those levels. In any case, we'll see what happens. This is all kind of just hot air and fluff and nonsense until we see how the market opens. So we'll have another update on natural gas tomorrow, I guess. If you've enjoyed this content, please give this video a thumbs up. Don't flame it, it's a joke. And consider subscribing to the channel. Take care.